Thank you very much for joining us today. All right, Kubi, so talk us through the first day of this new retail auction. Give us a sense of what has changed and what has been the impact.
Well, it's a significant change from what we've been used to for the past. I think it's over 3 years now that we've had the wholesale DAS. And instead of banks just giving CBN a bulk figure, this is the amount of demand we envisage, and then having one bid rate, we're now submitting a schedule with details of our customer bids. What it means is that if there's a customer that hasn't submitted a transaction before we go to bid, we can't estimate demand. You know, there will be no padding. Banks' demand will probably go down a little bit, because in the past, I mean, banks could ask for an extra $1 million, which they know that customer demand will come for before the next auction day, but that isn't going to happen anymore. We'll be bidding for exactly what we need at the point at which the central bank is selling it. It's significantly different. There's a format for all the bids, and they're done in Abuja for all the banks. Right.
Okay, so that, of course, is part of a plan to reduce the pressure on the naira, but we are still seeing that pressure in the interbank market. Why is that?
Well, there we would see it, and there are a couple of reasons for that. Even with wholesale DAS, there were restrictions around it. It wasn't a completely free market. A lot of transactions had been taken out of the wholesale DAS since last year, including funding for portfolio investors who are exiting the country. So those kind of transactions and some other invisible transactions were already not in that market. Generally, banks do not misappropriate such funds. At the very most, there could have been a one-day leading forward inside the bank's demand, but nothing more than that. Right. So we think we'll still see demand at pretty much the same levels. There won't be much change because those were regulated funds already. So that is one. And then two, on the side of the interbank market, we haven't seen the kind of portfolio inflows we were having earlier in the year. Right. If anything, we've been seeing some level of outflow. There was a lot of nervousness over the Fed decision last week. Yeah. So that has translated into reduced inflows for the country.
Right. So let me ask you this question clearly, Kubi. If these inflows remain weak, what does this mean for the naira? Can we sustain the naira at the current levels without those inflows, because they've become a major part of the supply to the FX market?
Well, you know, one of the things we've been repeating all year, I think we've been saying it for about a year, is that central bank has to be ready for the impacts of a reversal of the flows or a slowdown of the flows. We always knew that they'd been tracking the figures. The figures were significant. I mean, if you look at what is in the market versus what is in the reserves, I think it comes to maybe over 20%. Right. So if you have, what you hope for is that 20% doesn't leave you in one day, which so far it hasn't. You also hope for some for continued inflows over time. So as long as that happens, you're fine. But otherwise, what we saw in the last 1 month, when reserves went down by about, I think, $1 billion, we may see that happen again in future as CBN tries to defend the currency.
Interesting point you're making there. Okay, let's move on to the fixed income market. What I'm hearing is that yields are higher, and to some extent, we can also link this to the activities of foreign investors.
Well, yields are higher in the longer tenor instruments, like in the bond market. We're seeing significantly higher yields. We're seeing yields way above 13% and somewhat less interest. So if you look at the 2020-2019 maturities, we're seeing yields above 13% in those tenors. However, there's pressure in the treasury bills market. Those are shorter tenors. They're even more liquid, if that is possible, and we're seeing quite some pressure on rates. In fact, the next maturity for October, I think, is in single digits as we speak. Right.
Are you one of those that thinks that we're likely to see a new normal for interbank rates, given the tightening we've seen, particularly in Q3? We've seen the central bank stick to its, rather the monetary MPC sticking to its current stance at this last meeting. So that tightening will remain for at least another 2 months. So your thoughts about the new normal, if you like, for the interbank market?
Well, what we're seeing is a new cycle. Right now, rates have softened completely. We're seeing rates between 10.5 and 11.5%, depending on tenor and depending whether it's secured or unsecured. So we're seeing a greater swing between when the market is liquid and when the market was illiquid. We always expected it to take a while for the market to adjust to a cash reserve requirement of 50%, was pretty high. But I mean, the market is adjusting a bit. Banks, at least, are being less aggressive with their treasury bills. So for their own portfolios, they'll be staying quite liquid. They know that even when there's an inflow of FAC, the statutory allocations into the system, which we got last week, they know that even when we receive that, it won't stay for too long. So the planning has changed. Whether we'll see rates spike that high now that people have had more time to plan their liquidity and to know that, you know, they don't want to be stuck in 60% borrowing anymore, I think that remains to be seen as the cycle plays out.
All right. So a final call for particularly
Mm-hmm.
our investors or our viewers out of Nigeria. What's your take on the Naira, Kubi? Where do you see it going?
Well, Wale, the Naira seems to be stuck 162, 163. We've seen it there for a while. We're probably going to see it towards the end of the year. Although, that said, I think importers are probably at the peak of their cycle now. But again, with all the reforms coming in from CBN, there are some reforms around the BDC.
Right.
So I think they've put a lot of measures in place to keep the Naira stable, to keep it maybe the very low 160s, occasionally touching 159. So it remains to be seen what the effect of those recent reforms, especially around the borrow changes, will be.
Right. Nokubi, I guess anyone investing here just has to bet on the central bank, and all the cards are in the hands of the central bank, really. They can keep it stable, but of course there will always be a cost with respect to the reserves. Let's leave it there. Kubi, thank you very much for joining us.
All
Kubi
right,
Momo,
Wale.
Head of Market Risk at UBA.